So kicking off here today, what I wanted to run with everybody on is looking at for our topics in here today was following up post the summit that we did with Sarah Sullivan. So part of what you guys know or maybe aware of is that what I'm trying to build out for us as a community is these types of relationships with people that are have like a track record as professionals pulling together deals that have the right kind of qualifications for us. So as like a community that we would say, great, we have opportunities to be able to place investments. The hardest thing that I've ever found inside of placing investments is actually find out who are the quality operators that are going to be conservative enough for me, thinking through enough of the downside risk. At this point in my investing, it's actually much more important for me not to lose capital as it is to chase an extra few percent of return, especially in markets where there's so many providers that'll just throw out kind of whatever. So it's about just getting in. My intention is to be able to get the right relationships and then start to be able to share that deal flow and do that together with the community in the right way. So that way we have the collective wisdom of our community about looking at not just the particular deals themselves, but also about like how do we vet and look at who is going to be like a solid operator, what kind of underwriting needs to be done on that front as well. A long-term strategic initiative with this, what I'm also looking at doing is part and parcel is to then like host events with the operators or key investors that brings together something around like some type of like fun and adventure, but also with the opportunity to be able to have multiple days together. Something that I've done with like really key like strategic hires that I've done in the past to do something that was similar is that I actually will end up spending like a couple of days with them, pretty much like all day. And we're not just like sitting behind like a table. It's like we're doing like some hiking and we're like cooking together and we're doing some talking. We also have like some alone time because, you just need some time like alone to recharge batteries. But that's how I get the best looks at who people are like in real life, as opposed to their marketed branded image. So inside of looking to vet the operators or individual deals, that was my intention with being able to do that initial or that increased amount of vetting through basically like hosting trips, right? To be able to put high level people together, right? So my thought is that like with this kind of system is that you really couldn't get any better type of underwriting, right? So you would say like we've found good operators. We've spent time together with the operators to be able to get a really good look at them, ask them questions over a couple of days. You can't hide if you're spending a couple of days with people like it's continuous. And I also bring in people that are also really strong investors. So now there's like a crowdsourced level of look at somebody with like their deals and those people. And then at that point, we would say, great, now this is going to be how we would say this is our best look at how you would know that this channel is as good as it could be in terms of vetting out that opportunity. And then combining it with some, wicked fun and adventure like ice climbing or hiking or snowmobiling or whatever, because you just need some fun to get everybody to the table and everybody to have some fun together doing that. Helps build the relationships, but also gets everybody to actually show up is if you can make it wicked fun. So part of that's one of the things that is shown here today is like Sarah with Sugu Capital is just is one of the people that I'm looking at with some of the work that she does. And mainly more than anything, it's with all these new people that I'll be podcasting with and doing summits with, is just starting to like start this process of like having us start the conversations of looking at these people together to the extent that that's helpful for us and we can kind of collaboratively engage in how do we do this thing in a way that's going to make sense with our collective wisdom. Okay, so I feel like I just said like a ton. Chris Wheeler, I'd love to hear some of your thoughts on like this intention and, any feedback you have for me with this or.
You got it, Scott. I'm going to give you a little bit of a tool to remember my last name. Is it called Budweiser or Budweiser?
Is it Weiler? Do I always say it wrong?
Yeah.
I always say it wrong. You can call me Scoot Smythe. If it makes us even. Yeah.
It's the friggin' Germans. They're E's and I's,
Yeah.
But they have wonderful words too, like Schadenfreude. So yeah.
I'll try, man. I'll do my best.
Yeah, I think my two favorite words are there's Schadenfreude. There's Schlockoburst, which is whipping cream. They have some really, really great words. Any case, back on the subject, I love this idea. I really, really do. And having it surrounded around a fun adventure is even better when you can kind of get to know somebody's philosophy and see them when the lights and cameras aren't on, for an hour and a slick presentation. You can see what somebody's values are and see if it's a good match. My question is this, you and your team taking these adventures and vetting these companies, or are maybe some of your potential accredited investors on this group able to attend as well?
Yeah. So the thought here is pull in the operators, right? And then the people that are, serious investors. And those are the people that I really want to also join in, because the idea here is that then it helps me get multiple sets of eyes on whatever's going on. I get to learn from the collective wisdom of the other investors that are looking at this. And then if we come back to the table with it and we're saying like, look, it's not, okay, here's the operator. It's not just saying Scott found an operator. It's here's all the work that we have looked at over the course of a few days together. Or this is how we profile this kind of person collectively, like as a community, with like saying, okay, well, the most savvy, sophisticated investors are the ones that are providing real value by bringing back information to the community. So in some way, the community like supports like bringing them to on the trips and stuff. So yeah, are you trying to angle for a spot on this snowmobiling trip, Chris? As I was going.
Oh no, I would never invite myself. Never. I'm just questioning, what the process is.
Yeah, and I'm with you on that. To me, this is the most fun thing I could possibly do is to like get high level adventure with really solid people together in a way that says we have like a really clear intention that it's going to improve all of our lives if we're successful in spending like this time together. So yeah. Go
ahead.
No, please go ahead. Yeah.
Have you like fleshed this out? Like, I mean, is this something that is a value add to the community, or is this something where it's, you're like a fund of funds, so there's like, there's a part of a piece that you get, or is it, how does that fit into the picture, I guess? Is that, or is that still being worked out?
So my thinking in it is, the short answer is still being worked out. My thinking into everything that I try to create is that I'm a quality product person first, right? So I try to like make sure where I'm not trying to make money in the very beginning, but I'm just trying to get to like, what's the absolute positively best end product that I can get to, and then figure out like a revenue model after the fact that says, okay, well, this is who this is going to be appropriate for. Because to be frank, everything I build is actually for me, right? It's for me first. And then because it's an extension of me doing the thing, and then I get to invite everybody else on that's like, who's like me, who wants ultimate time, money, freedom, security, quality relationships, fun and adventure, lives by the same type, because those are my people. Those are the people I want to party with and go have a good time with. So I'll figure out the money later. But in the meantime, let's just create like a super quality product.
Okay, you had me at Fun Adventure.
I knew I would. You and your ultra light backpacking self. Yeah. My man, Jeff, I saw your hand up, brother.
Yeah, so I think this is kind of right up the alley for me right now, as I've been looking at different ways to, different streams of passive income, and I'm in this realm, as we've talked before, and then thinking through the goals. I was with the talking to some people, I've been thinking about actually sort of raising some money to be, as Chris said, a fund of funds, except I wouldn't want to dilute investors. So if you have enough money and capital, you can get a better pref deal and a better piece of the pie up front, so that the investors that wouldn't have access to what about can get access. Some of the investors just don't, all they know is stock market. So and part of that is the responsibility then of vetting these operators, because it's one thing to say raise some money, which I have from my personal deal before, but then you better know who you're investing with, and like you said, the quality and how they are, because your reputation essentially is somewhat on the line as well, because you're putting your faith in that person, and by extension the people friends and family, plus your circles as they grow wider, you're saying, hey, this is for the most part somebody I vetted and things. So this is a pretty cool idea.
Cool. Yeah, I'm with you 100%. Right. And it's one thing if it's my own money. It's another thing if I'm trying to bring somebody else to the table and say, hey, this is somebody we should take a look at. Right. And that's a whole another thing, is that if we come back to the table and we say, hey, we've taken a look at, we think it's okay. Like, even if we're not even making any money off of it, I still think there's a huge amount of responsibility with that. And especially if you're saying like you're a fund of funds and you're actually getting paid, then it becomes really important. I believe it becomes really important of how do you do that the right way, right? Because from talking with Connie and some of the conversations that I've had with her, is that when you seek out to do these kinds of things, where you're running a fund of funds or you're start to vet investments, that the moment that there's monetization that starts to happen, all of a sudden incentives can shift. As let's say monetization and incentives start to shift people's values, right? And in a historical sense, right? Where they start trying to say like, how much money can I make by promoting this kind of deal? And even if they don't think they're being shady, right? It seems to be the case that they start to close their mind off of all the reasons why this deal might not be a good deal. And we know that actually what's most important is all the deals you say no to, right? The amount of deals you're saying no to is actually indicative to the success of the deals that you're going to get into, right? So it's, a combination of you start making money and you get lazy, I think. And that's where a lot of these things like start to go like, go south. So that'll be really important, I think, with anything that I'm doing, that it says, cool, we want to really think through, knowing the tendency of human nature as money relates to these things, to set up the right kind of firewalls. I say this is how we're going to operate, because ultimately it's about this bigger objective. It's not about turn an extra 5% for, whatever, right? Go ahead, Chris. Yeah, I saw you raise your hand so politely. Amazing.
Hey, yeah, Scott, the thing that I would want to be careful about is you have really spent some time creating something and have a very, well, in my mind and anybody I talk to, a very good reputation. When you start going into this realm of, operators and investors to invest those same people's money that you've created all this time curating this good relationship and reputation, if one of them or two of them ends up either A, being shady, or B, losing money, that can unfortunately be reflected onto you. And considering that you have a environment here which is very close to the vest and is part of your company, and they're more on the outside, I would just, it's something to be aware of, that once, it's one thing when you pay for a service, it's another when their monies are going into something that is investing. So I would be concerned. I'm not saying that you shouldn't do it, but it's a different level from providing a service. And because you're creating this atmosphere, people are going to, some people may, especially if you have investors who are not quite as experienced, may blame you for it. I don't know.
I think that's definitely the case, right? So it's so if we talk about this as like chunking through like levels of difficulty, the way that I view this kind of project is to say, like, first, can we just bring operators to the table? That's like we can all take a look at them and say, hey, how well can we do that together? As looking at people and having a good conversation of like, how do we actually vet this operator in a way that we all feel comfortable with? How do we vet these kinds of deals? Are these the right kind of deals? And then we've already started to provide value to the community just because we're helping bring people in. Otherwise, we might not have had an opportunity to look at closely and look at like with other people. Then the next level of that is organizing the information. Okay, among all of these operators that we have, do we have a system and process that we're looking at about how do we analyze this operator and how do we rank what's important about that operator? And same thing like on like the deal front, right? So then what we're doing is we're taking the level of like the community, we're putting into a system and process, and now this is actually training the community members from the least experienced into a system and process, which is like a methodology that the more experienced members are helping flesh out, right? And then after that, then so we say, well, great. Up until all of these points, I would say it would always, in my thinking, unless we really want to do something that's a big departure, all we're really doing is saying we're going to help better organize and corral information, and that's it. Because then all the moments like it's big boy once you start putting your own money in. Like you're making that choice to put your money in based on this information. This is just the best information we know how to organize and what to look at. And if you know something better than that, that's great. Put it in there. Right. And if you don't feel comfortable with making that investment, then don't make that investment. Right. But the same type of methodology could be cross-applied to like an operator like Sarah Sullivan, as it would be like to like if Robert had a deal and he's like, I got this apartment. Like, cool. Here's the best thinking we know about how do we vet an apartment deal. If you want to talk about that, like as a community of people that are interested in having a GP interest and saying, cool, I think I can talk to this community that I have a relationship with. I understand how they want to operate. I understand how they want information presented. I understand how they want to put money. This is the kind of deal that's going to be appropriate, like here, right? But at no point do I really want to ever be in a position where I'm saying like, I'm taking your money and then I'm placing it for you, because like syndications are way too risky. You're inevitably going to have deals that are going to have problems. And when that happens, like I want to be out ice claiming. I don't want to be dealing with you crying to me on the phone, about like whatever's going on, not that I don't love you. It's just,
no, I hear you. I wouldn't be worried about the crying on the shoulder. I'd be worried about the guy who says, you lost my money, and, because they still have a bunch, you know as well as I do that you can do everything right. And somebody could sue you even though they have zero chance at winning. We live in a very litigious society. So I'm just looking out for you.
100%. Dude, I appreciate it, bro. Like, and that's why I was just, I'm trying to thread that needle. So I always appreciate like the counterpoint on it, because I don't really want to be in a position where that anybody is actually saying like, when it comes to the investing side, that it's like, you screwed me, Scott. And like, you need to have a part of the decision that says you're responsible for your life and the decisions that you make. My role is, this is the best possible thinking that I know about how to approach life. And like, as a subset exact, here's how I approach like investing. Ultimately, you can't defer parts of your life to other people and think that it's ever going to work. It doesn't work that way. Like, no matter how high you get up in the chain, the best you can do, my experience is, the best you can do is start to crunch the time down through systems, processes, and focus. But it never seems to be the case that I've found anybody that's able to say like, I'm able to fully check out of my own life and being able to make sure that like at least some level of oversight is happening on their investing life or whatever. Billionaires to sports nutritionists to anybody I can find. If it's important to you, if it's not getting any of your attention, it's going to go to shit. There's no other way around it. Like,
Oh yeah. Personal experience with that. My dad checked out. We moved from a mansion in Beverly Hills into a condo because he didn't pay attention to his investments. So maybe that was a little too personal, but I hear what
I've been there too, man. I made that $100,000 mistake. I just hope to only make it once. I'm pretty sure if I like start to do it again, life is going to teach me the same lesson again, which is you don't get to fully check out, Yeah.
Well, I don't know if I ever can. I've been agonizing over that lately. It's like, what does retirement look like for me? And I don't think I can ever do it. I just enjoy being in the game too much. But you know, I'm already pretty passive, but there will come a time in life I'll want to be even more passive. But I guess what you're saying about still having some oversight, no matter where you are, even if you're retired, you know, especially if you're retired and you're not in the day-to-day, you've got to have a system of scrutinizing and looking over your investments. So I 100%. And one last thing, Scott, just want to say, you know, I start with the negative only because I brainstorm and, you know, I just like to be aware of all the parts of it. I see tremendous value in what you're trying to shape here. And as I become a bit more, you know, more and more passive, these kind of investments, I'm going to be trickling more into. So I would find value in it.
Perfect. Beautiful. Yeah. And that's, with all these things, right? As you're saying, Chris, is like, we should never view like these things as like ABs, right? It's like, it's a section of your life that like, okay, cool. This is the part of my life that I experiment with, like here, if it's important to you, and then you learn slowly, like over time. And I think that is the right approach. Brendan, I saw your hand up, brother. Thanks, Chris.
Yeah. My hand was up. You know, I like the idea. You know, most of the communities around real estate and finance that I'm involved with have a real marketing or sales angle. You know, I know what yours is. You know, you do legal, you do taxes, you do insurance. But, you know, you're looking at this other, you know, you've provided this community where you're not just selling that. That's kind of a byproduct of some of the other things that we work on. And so over time, I've built trust with some of you in the community. And I see this as a safer community because it's not just pitching the next big deal, you know, to me. You know, my spouse and I have built our own business primarily by ourselves, you know, without you know, bringing in other partners and stuff. And I'm not saying that's bad, but for our particular path, you know, we've done it all ourselves. So we don't have, you know, we have trust and control issues in giving up some of that control or authority and such. But, you know, we are looking to expand, you know, with more passive stuff. You know, we've done a couple of small syndications, you know, getting some exposure as limited partners, but we're still very, you know, ill-equipped to vet and build trust with a bigger deal that's not just a small percentage of our investable capital. You know, so I'm fairly interested in this approach. I'd ask you, what time frame are you looking at to start this, and would it be an aspect of the Wednesday calls or something different, like specific work sessions looking at a particular operator or a particular deal or something like that?
Yeah, so I think it's a great question, right? So there's some things that we came out of like the last summit that I did with Sarah Sullivan. So working with her, she ended up giving me this spreadsheet that you guys can see here that I just popped into the chat. And so this is the kind of thing that the way in which that I see like some of these operators are currently operating. It's very like rudimentary types of organization, but it has but it's good enough to be able to help us be able to start a conversation, right? Where you can see in here where she has, you know, she has three different deal offerings. Their one is going to be the Dallas value add, her Forex trading fund, and like this energy fund. And it tells you like the cash return, equity multiple, target hold period, etc. Each title is linked to the like app.junipersquare.com for the name of each one of those investments. And that takes you to essentially the offering page that says, cool, you know, here's the basic terms of the deal. Here's how different levels of capital you invest, what different like rates that they're offering, at least to the public, you know, and something like that. we would probably also want to like work up something with her that would be like, okay, well, how do we vet somebody that is like a Sarah Sullivan, right? What are going to be like the important pieces that we're going to do to like vet either an individual operator or like I think Sarah, I view her as like, she's almost like a broker of operators, right? She's finding operators, vetting them, and then pulling them together to be able to make Sugo Capital like work, right?
Yeah.
So there could be like multiple levels of like how do we look at people here together. The question about like what is the format for this type of initiative becomes interesting, right? Because with a lot of these people, it's like we're figuring out as a marketing team about, am I bringing them on to like podcast with them? Are we able to do that? Am I doing like some type of summit where inside of like the summit, we have them for like a few hours for them to talk to them about like what they have going on. And those are like the major pieces that I've seen, right? In one way or another, it's, we need information like from you, and then we need an extended period of time to talk to you about what's going on, for you to present, for us to ask questions and start to like drill down. Now, over time, like we might say, like, we want multiple, like we want follow-up meetings essentially to be able to say, hey, we looked at this stuff as a community. We have like all these new questions. Maybe we just send them by email. Maybe it comes back, whatever. But this is a big question marks, right? There's a big question mark as, do we do it through like a standard, like weekly meeting? Or is something like this best off done with saying, well, actually what we should do is just organize it all in the vault. And then we do like ad hoc meetings, right? So, hey, cool. We're going to have like, this guy's going to come in and like present to the group here. And it's going to be like Thursday at like this time, right? Because that's when we could get them to like come in. And otherwise, like we could have some type of like drumbeat, like as a community. I'm not entirely sure if I have, or we as a team have enough content to be able to push forward with like every week from us, like our level of organization, our level of about speed and ability to move. Our conversations that we're having this morning as a team is like, we don't think that we can move that fast, right? With how much resources get committed to being able to host like a time for everybody to come together. So I'm working on some of those ends about like, how do we get the right kind of access, and building along the lines of like, okay, what makes this most efficient for me? And then what parts can I include other people on? Because that's an important function, right? Is that there's crowdsourced learning, crowdsourced oversight that comes with it. The other part too is like inside of like this group, what does this group need to turn in? What needs to be the value of this group, right? Is this group like a place that's a community-led group that says, hey, well, there's certain members of the community that says, hey, we know we're going in this direction, and that the group members are stepping in to say, cool, we'll teach about various aspects of like, here's what we do to vet people that are like Sarah Sullivan's or individual deal operators, or whatever the case may be. Because my team is actually struggling and being able to say like to get the right content, to be able to say is like, hey, each week we're going to have new fresh content, from that we're able to pull together. So it raises a good question on multiple fronts, Brendan, about like what the way that can work. I hope that wasn't too confusing, but.
Well, I understand that you're figuring it out and may need to look at a lot of things. I think something that may be valuable, once you kind of look at a deal and it passes the sniff test, it's like, okay, well, there's this apartment renovation project, or there's some provisioned land and we're going to build something on it. Maybe you have everyone read the PPM so they know the details, and then you have a session with the operator to dig into the gotchas that are there in the fine print or something.
I'm wondering about that, Brendan, too. Like, so I saw Connie just posted here in the chat. She says, well, Sarah from Sugo, she has a lot of great training on like due diligence, for example, right? One of the ways that we could start the chunking up, right, as learning together as a community, is all getting on the same page with the same body of knowledge, and saying like, perhaps what we could do is we come together for our week, and then we start just working our way through like, do a breakout room. We're going to watch so much of like the course content like this week. have some discussion about that, of like, what other things do we know as a community, like should have been added to Sarah's training to take that training to like another level of what she has there. And maybe that's what we like would be valuable as a way to get us moving in that direction. In the meantime, I'd be able to share, here's deals, here's stuff that we're looking at for other discussion I'm getting from other operators. But that might be one of the solutions to the problem, right? As we look at grabbing these like courses together and say, cool, let's just study through the course. We're interested in syndications right now. Let's study through the course on syndications together and talk about those as we go through. And then we're all learning together. We all are on the same page with, here's the best thinking that we have of all of the aspects of how do we do like due diligence. And at the same time, let's look at some real stuff, right? So we're getting some real world practical experience of like actual people we're looking at. Maybe something like that could solve those issues.
Yeah, maybe. I've followed Sarah for a couple of years, and I know you've done some events and podcasts and stuff with her, but I haven't done business with her before. What I always worry about the vetting is she has a big financial interest in getting you to sign up, and so I haven't quite built that trust about how much of this is marketing enabling me to say yes.
Right. I'm with you, man.
How much of it is generally very valuable, right?
100%. And you won't know that answer, but we as a community all looking at the same information will have that answer.
Yeah,
because we'll collectively we'll be looking at the same stuff and say, hey, this is either a BS course or this is a good course, and this is a way in which we can all look at the same content together. Chris, I saw your hand up, buddy. Thank you, Brandon.
Yeah. I just, one of the things that you had just said that I want to give you my opinion on, basically that your team is struggling to come up with topics. I get a lot of value out of having open forums too. And, there is, I haven't seen you do it very often, but I would more often than you do now, just have it once a month, twice a month for these calls. Just make it more of an open forum call, and it just, the conversation just becomes organic. Somebody always has something interesting, and then everybody has always good feedback on it. So if you're struggling to continue the weekly thing because creatively coming up with a new subject every week is, too time consuming, make 50% of the time or more open forum.
Okay, cool. Yeah, I think we can do that. If you guys are cool with that and feel good with that, and
I'm happy to run them too occasionally.
Sweet. Okay, great. So then I think that gives like Liz enough direction to be able to ask about who has something they want to talk about coming in next week, so people can maybe self-solicit. Chris Budweiser says that this is great. So then he wants to do it that way, and he already has our first volunteer. I saw Brendan give a thumbs up. Man, that's pretty much just saying he's willing to do it too, I think. So I think this is great. Cool. Great. So then, great. So I think that actually solves one of the major pieces that I was looking at here today, was about like, okay, what are we going to do for like a go forward plan? If we do do it every 4 weeks is going to be like open forum for discussion. Community members can then offer topics for discussion to be able to kick around as investors. Then the other times, the other times here is where we can start to explore, like, can we get valuable topics to be able to talk about there? And also my understanding is like with the underlying piece here is perhaps there's a certain load of coursework around like syndications, for example, or doing this type of like deal vetting that is going to allow us to be able to chunk through to like this larger vision of, okay, how do we get everybody on the same page with how are we going to be doing collective due diligence on like operators and deals, so that we can be successful with the initiative I'm working on with pulling in more operators into our community. Because I'm doing podcasts and summits now, like scheduled in for about like one every month with like a new operator with like a new set of deals with new pieces to look at, right? So I'm out there on the front lines doing the thing of like, let me form these relationships and start pulling information here into the community. And the piece that I want to develop with the community is this leveraged impact of the due diligence. Because ultimately what I know and what I've seen over and over and over again from working with thousands and thousands of investors is that there's this thing called syndication scare the shit out of me, right? But if I can find great operators, then all of a sudden 95% of the workload of my life about what I need to do with my money just went away. And that actually is the biggest stress that I have in my life, right? And so like if we can solve this last problem together, then Royal Legal Solutions will then have the complete stack, which is we have a system and process, which makes you the CEO of a wealth building company that we have. Here's the meeting schedules that you need with your CPAs, your attorneys, your financial planning with your fractional CFO. And here's like the types of deals that you can look at to know like what's going to be as safe as you can possibly make it reasonably with the right kind of stack, right? Because that's what I'm trying to build to, is this place where it's like it's complete turnkey wealth system that says, nope, you just have your money. It works like this. You don't even have to think about how to run it. The systems and processes are all there with the right professional network, the right professional team, the right kind of oversight. And it's the best you could ever have done by yourself, right? And all you have to do is become a member of the community and sign up.
Scott, I want to kind of flesh something out here, because when I look at your current business model, there's a lot of synergies, between, the accounting, the legal, the structure set up, that it's predominantly toward real estate investors. There's a lot of synergies and a lot of the different silos that you have within the network that you've created. One of the issues I see with this is that most of the people that you're attracting, at least from what I'm seeing, is entrepreneurs who are used to handling finances within their own corporate or company or own like real estate structure. And I find I find I'm an outlier, that I do invest in syndications and the stock market. And really, this is going to be blasphemous and people are going to maybe not believe this, but I don't particularly, real estate's great. But I don't love real estate. I love what real estate can do for me. I love that it's extremely inefficient. I'll invest in anything that gives me the best return, and I just can't find anything better than real estate. But because, like I said, your structure is around, predominantly these kind of investors, I'm wondering, unless there's the marketing in a different direction, and maybe I'm missing something, that it's going to be a little more pushback from more people than you might think. Does that make sense?
It does make sense. What I'm actually about is the big meta question. I got two things I care about. The number one thing I care about is the question of how do I live the best possible life? That's a question I've been thinking about since I was a kid, and really thinking deeply about is like, how in the world do you even answer that question? And coming through it, and I've done tons of seminars, books, and all that stuff throughout the whole year. I now coach a class. I got like a whole planner I've developed that says, I think this is like the theory behind how you do it, and this is how you execute around doing it. What I realized though is that's the road trip, right? But every road trip, you got to have gas to put in the car. But if you're sitting out there, it's how hard do you have to work for the gas? Because there's only gas in the road trip, really. Right. And so then my thinking is like, real estate investors, we say we love real estate, but when's the last time you gave like a hug to a big pile of bricks? Because you're like, oh, I just love you so much. No, we really understand that it's about this thing about like safety and security, like with our money. We like the fact that it like lets us sleep easy at night, gives us passive income, and does all this stuff, right? And I get it. People are saying, I want to be a real estate investor right now. That's just the story they know. Once they're like, oh, this is a better future, a brighter future, that I can join in on a journey and get trained in over the course of a year about how to be a CEO of a wealth building company with fractionalized team members and get trained in on how to do investment analysis, portfolio analysis, how my taxes need to like work in with like my investments, how do all these things need to work, which is what we're positioning ourselves into, is to be able to not just set these things up and kick it to investors, but it's training them into how to do it so they're self-sufficient at the end of the year. Then this is actually how we get like our very best kind of client, right? Because they're not going to need a ton of hand-holding in the future. We're all making like money together, and we've actually really found this expedited way of being able to move people to freedom. The rest of the problems, I'm just going to let God sort out, or the universe or creator or whatever you want to call it. You know, it's not my job to sort all that out. My only job is to figure out these two questions. What the heck is the best possible road trip can I get on? What's the easiest, most predictable and stable way that I can keep putting gas in the car so I can go do the road trip? Everything else will sort itself out. I know that might be like a little brash as like an entrepreneur to come with that light. It's definitely not the most profitable thing I could be doing, because the most profitable thing I could be doing is just honing in on real estate investors and trying to own that market. But it's not the question I'm really curious about. It's these other things. And it just so happens that real estate investing, of course, is going to be a durable part of all of our portfolios, because it's such a solid foundation. And I don't think that's ever going to go away. It's just, there's these broader things in wealth building that are so much more than what the average real estate investor knows. And it's not good enough for us to have freedom. It's what's good enough for me is like, can I get there? And then how many people can I bring along the road with me? You know, and that's what makes life great, because that feels amazing to be like, cool, I'm part of a bigger impact that's bigger than me. And otherwise you're just like you're like a loner rich guy on top of a mountain, you know, you're like, cool, like doing cool stuff, but
I don't think it exists. I'm serious. I think it's a team sport. And if you're rich, it's typically because you have you're leveraging other people's, time. So I mean, unless you're part of some trust fund and you inherited it from, and which is, that a lot of rich people are, and they inherit it from their family. Right. Maybe they could be that way, but anybody who's self-made, you're not doing it without other people.
Yeah. You want to see other people do it too. Like that's the deal, like I started with nothing, like pushing lawnmowers, and nobody gave me anything. I was a single mother, and so for me, and, I had freaking super hard upbringing, like getting to a place of like how to be happy in life, how to be like about like a purpose. How do you find what that purpose is? How do you find a way to create wealth and like a way to do that? It's like a hard fought battle for me. I was like, man, if I can make that any easier for anybody else, like that's what I want to be about. And I'm stoked that, there's some commonalities with other people that are interested in the same thing too. Jeff, I know you've had your hand up for a bit, buddy. I wanted to give you an opportunity here.
One.
Yeah. The freedom pursuer.
Well, yeah.
On with Mike.
So I think my comment kind of, and my thoughts kind of go in line with your second point then, as you're just articulating it with gas in it. And what I'm finding recently is that some of these operators are executing at a higher level and have access to opportunities that I'll call it the common man or some people starting out or at a different level don't have access to. And so by tapping into some of these operators, it's a way to put that gas in the tank more quickly than if you're kind of struggling through it on your own. I see that as an easier path, like you said.
Yeah, I think so. Right. And we're all going to find, just to be clear, everyone, is like, we're all going to find like our right place into like what deal. There might be like certain syndications that are coming up and will say, hey, these all look great or whatever. But it also might be like Robert Vale has like an apartment complex and he's like, I got a banger of an apartment complex over here. And there's going to be a ton of people in the group that are going to be like, I don't feel comfortable with syndications, but I got to meet Robert, So it seems like a nice guy. It's a great looking beard. I want to put money in there. Right. You never know what that's going to be. Right. And so I think it's there's a place for all of the different things like need to exist, because there's different people that are ready to do different things at any given time. And you should only ever do what it is that you feel like you should do. Right. Because they're all great decisions. They just have different trade-offs that come with them. Right. So, we'll be working, on educating into that. I hope that's not too esoteric for anybody. But hey, Jeff, I've seen you here there patiently with your hand raised, brother.
another Jeff. It's if you want to be recognized, Constance, you're going to need to change your name to Jeff, and then you'll get moved. Alphabet
And
well,
growing a
actually, I guess
mustache.
we're-
That seems to be
Yeah.
required. Yeah. Yeah.
Yeah. So I love your two comments about your big meta question. I've been retired for 2 years, and yeah, the question really thinking about, like, I don't know if I fully thought it through, like in terms of retirement, but I think for me, the two main goals are like bringing value to others and continuing to grow your assets so that you can continue to be able to help more and more people. And like one of the things that I do in retirement is like, I was the first in my family to go to college, and like I think in my second quarter of calculus, I got like a D, and I had this imposter syndrome, and I didn't think I belonged. And there was a retired engineer who helped me through school, and so now I tutor computer science at this same community college I went to years ago. And it's like but like it's this weird thing, like, and it's a love-hate thing for me. I love helping the students, but I also feel like, oh, it's just these individuals. It's 10 people, 20 people a quarter. And it's like, I struggle with like, how am I having a big enough impact on a larger and larger community? And so, and part of what enabled my retirement was we bought some apartments like 5 years ago in the Seattle area that did really well. And so that enabled, even though I work here, and so I worked here in Silicon Valley for 35 years, I say I made more money on those apartments than I did in 35 years of Silicon Valley. So, I started joining your group like as part of my educational journey to try to understand like all these things. And I've been to a bunch of Sarah Silverman's, Sugro Capital's webinars. She does a great job of educating. And I think, that's one of the things that you guys have done really well over the years. I've learned a lot about, a whole bunch of cool things. The Augusta rule was one of my favorites that I loved hearing about, but I've never invested once in Sarah's deals. Like, she is a broker of deals, and I always figure out who it is that she's representing. It's Neil Bawa, it's, some oil and gas company in Texas. And I end up forming a relationship directly with those guys rather than going through Sarah for whatever reason, because they also provide educational materials. So it's an interesting, I think, thought about how do you navigate that and provide value. I love having the community come together and like, education. I'm all about like learning more and being better, right? It goes to that point of continuing to grow assets and doing it in the tax efficient manner. I think there's an opportunity like in education. One of the things I did learn from Sarah is about like oil and gas as an asset class, or these cash machines as an asset class, those characteristics. So I think you could educate people about different asset classes. We've talked a bit about multifamily, but I think learning more about other asset classes and what the returns look like and how they might be different, how they might have, accelerated depreciation up front or some other characteristics. Like I think cash machines provide you higher cash flow, like 20% a year, but you get nothing on the back end. And I think that's also useful to also in terms of education is like syndicator reviews. I've invested in like a half a dozen different syndicators. I saw somebody talk about Brian Burke. So I've invested in Praxis Capital. Brian wrote this book on hands-off real estate investor. They're a syndicator, obviously Neil Bawa, and a bunch of other syndicators. So I think through that experience, I think that's a good thing for people to talk about. And there are some groups that are private that like do some of this syndicator review, but I think this would be a great opportunity in addition to education around some of these different topics about just sort of getting people familiar with some of these syndicators and what their track record has looked like.
What is your overall experience, feeling about investing in syndication? Sounds like you've been doing it for a few years. Are you happy with the results? On average, do you find that the results that they predict are reasonable and happen?
Yeah, so for us, right, so what happened was we had like a retirement account. So mine have all been through my self-directed IRA. And a lot of them were like 2021, 2020. And so I haven't got to like the end yet. It's, all of them, I feel like that I've invested in are very transparent, seem to have high integrity, like Brian Burke, Grow Capitus, Vertical Street Ventures, some others. Like I feel like some of the deals though, like are not paying their preferred returns, so they're preserving cash. Those tend to be, some of them are more like some of Neil Bawa's, like I think were more like development, and so The ones that are doing better now are more like the value add, where they start off with a property and they said, hey, we're going to go in here and renovate, improve cash flow, improve occupancy, and those ones are continuing to pay preferred returns. But I think with some of the ones that were development projects, and Sarah was one of the promoters, I think like one of Neil's deals, Avondale Commons is in Arizona. It's a development project. You know, it turns out that all the raw materials are more expensive, that there's, you know, labor materials have shot up with inflation. And so those look like they're going to take longer, but I feel like in the end, we're going to get there. Maybe I'm being naive there. I mean, that's still a question, but I feel like the ones that were more value add oriented are more solid. And some of these ones that were more going to be ground up development are in a bit riskier spot.
I'm going to put you a little bit on the spot, Jeff, because maybe you said it and I didn't hear it, but I actually just wanted more of your general feeling about the asset class. I mean, I know you're invested in it, and obviously you want it to succeed, but have you been happy with the results?
I have been. Yeah, no, I still love it. I still think multifamily, and so like because all my syndications are multifamily syndications, I've invested in like some of Brandon. Open Door Capital, self-storage, or mobile home parks, or anything like that. Mine have all been multifamily. I love multifamily as an asset class. You know, my personal multifamily story is we bought in a $4 million apartment complex 5 years ago. We just refinanced. It's worth $7.5 million after 5 years. You know, $800,000 down is turned into $3.5 million in 5 years. So I love multifamily, especially value add multifamily. One of the projects that we're doing right now in our apartments is we're adding in-unit washer and dryers. It'll cost me about $3,000 per door. There's about 50 doors.
We're retired.
Yeah, you thought, right? $150,000 in adding washers and dryers will add about $1 million of value to the apartment. So I love multifamily. I love, you know, value add. And there are things like this that you can do that, you know, bring a tremendous amount of value to apartments. So yeah, I still love the asset class.
And Chris, I've been doing it for like 3 years, multifamily, but more recently got into some of the alternative assets of the mobile home fun park last year, and then over a year ago, and then car wash funds. Those are kind of new on the edge. And so some of the hospitality fund where it was golf course and wedding venue. So I have got some diversity amongst my syndications as well. And so far they've delivered what they've been doing, including the multifamily, because the operators, there's certain people that were getting in trouble, but the operators that I had vetted and chose have performed to what they said they would.
Hey guys, we got 4 minutes left here into the end of the call, so I just want to make sure that we can end on time. I hate to break up like an amazing discussion that's about to happen into the conversation, and it's amazing. What I actually would really love, like Jeff, Jeff M, Jeff the Freedom Pursuer, Allen, Chris, anybody that's on this call, right? If there's particular syndicators that you guys are saying, hey, here's the people that are really that we've invested money with before, or people that we're currently pursuing, would you please shoot me an email with a list of those people, just to like at Scott@Royal Legal Solutions, because what I'm going to do is I'm going to aggregate in the list, and then I'm going to start using those people that that the community, anybody here in the community is already using or looking to use, to help better educate the community, but also to be able to help you in any aspect that you have of, that I can provide or the community is able to provide, and better being able to vet somebody there. So if anybody's currently using syndicators or operators, operator brokerages like Sugo Capital, like with Sarah Sullivan, you can just please email them over to me so I can get a feel for who are the people we're currently using, who are the people we're looking at, who are the people we would like to vet. I can tap my network and resources and also help bring those in. Connie, I wanted to give you an opportunity here before we break, because you've been so patient listening to all us boys jibber jabber about syndications with your hand up.
Okay, great. Well, just very succinctly, it's the combination of education plus having the opportunity available where people make their own choices about the opportunity. You, Scott, are not quote unquote recommending these. You're not taking their money, but actually we're talking about the operators, the deals, how to vet them. That's just a huge value add for the community to have the power of the group to discuss all this. Like, I'm not keen on syndications because I got burned on them in the previous group that I was in. But I'm going to keep an open mind, right? That things could be different. And that's where the combination of education and opportunity, but at the same time, like you said, Scott, to make sure that people know that they can't outsource their own responsibilities. We teach you how to do due diligence, right? Do it either with a group or yourself, but you're the one that makes the final decision on whether to pull the trigger or not, right? So that's my 2 cents. I think it's exciting. I'm interested in learning more. And as Jeff M. said, even the opportunity to learn about different asset classes. I never heard about oil and gas before I started attending Sarah's Sugo Capital presentations, right? That might be something for the future. So for me, the focus on the education plus the opportunity while clearly delineating people's own responsibility is like critical for everyone's success. That's my 2 cents. Thanks.
Thanks, Connie. Great wrap up for us here. So it's want to say thank you to everyone for contributing into today's conversation. Thank you to everybody else who's been quietly learning and listening in the background. See you later, Brendan. And again, just email over to you, Scott@royallegalsolutions.com. Any operators or deal brokers that you're currently invested in, or anyone that you're looking to invest in. So we can go ahead and start that process of starting to pull together some of these people. Then if there's those of us that have like invested in particular operators like Jeff M or Jeff Allen, or anybody else here would be able to give us like a firsthand look about what their experience has been with them. It'd be my intention at that point too, is to pull people in that says like, who's worked with, one of the key pieces of due diligence here is what other people do we know that are also invested with those operators and maybe have been invested with them through multiple exit cycles, right? As you heard here, right? There was one of the key questions that Chris asked is like, well, how happy are you with them? Jeff M said, I'm really stoked with them. But we haven't got through an exit cycle yet, which is also a really important piece of it because certain things happen like, oh, rising material costs actually happened. And okay, what do they do to anticipate that, right? We're seeing a lot of syndications that are getting popped right now and are exploded because interest rates actually went up and the operators were so green, they never anticipated such a fast interest rate rise. So they didn't hedge off on that risk, right? So most syndications out there are great ways to lose money. There's a small segment of syndications and operators out there that are phenomenal opportunities. And then you can just surf in the wake of people that are amazing at what they do. But finding those amazing people is just like making a rock star hire inside of a company, right? It takes vetting, it takes time, it takes patience. And you're always better off not making a decision than making one without having done all the right pieces in place, right? Because once the money's lit on fire, once the money's placed, it's placed. There ain't nothing you're going to do about it, right? So I emphasize like that piece of it, that what we're endeavoring to do here is a very difficult thing, but we're going to do it with best practices and with patience and being able to do it in the best possible way together as a community. So special thanks to Jeff Allen, Jeff M, Chris Budweiser, to Connie, and to everybody else that's been with us here today. Thank you guys. I'll see you again next week.